access to capital. We're going to start with a quote here at the bottom of the screen from the United States Small Business Administration. The SBA states, "It costs money to start and operate a successful business. Funding your business is one of the first and most important financial choices most business owners make. How you choose to fund your business could affect how you structure and run your business." What does that mean? That means that we commonly see, especially pre-launch and startup businesses, kind of do things backwards. They might create a business plan, formal or informal, but without consideration of what access to capital do they have to implement. Because a big 3-inch, 3-ring binder does little good for us if we don't have the ability to actually implement that. So we believe that we should start with funding first and then decide what we can implement, because in many cases we can ramp up access to capital over time, but not all small businesses are going to immediately qualify for a large amount. So let's go ahead and dig into the material. A couple introductions. So BCLI, Business Credit Literacy Initiative, is a 501c3, has been one since 2016, based out of St. Louis, member of the Money Smart Alliance that was formed by the FDIC and promoted by the SBA. Secondly, we have ICS, Innovative Capital Strategies, based out of Northeast Texas, and we administer the grant from the 501c3 to educate small businesses and help them access capital. Now, ICS was formed by a group of experts, current and former SCORE mentors, SBDC advisors, business bankers, and others to address a key problem faced by most small businesses, which is access to capital. So what we're going to go through today, and it may take us a little less than an hour, when we're doing this in person in front of audiences at churches and chambers and EDCs and business organizations. Of course, it's more interactive than this recorded on-demand YouTube. But this is going to be some very practical information that's applicable regardless if you're a pre-launch, startup, or existing business. In terms of my background, I was a SCORE mentor out of North Texas, and I was responsible for the workshops conducted over a 14-county area. Coming out of graduate school, I was a senior consultant with Deloitte & Touche, now referred to as Deloitte, whereby I worked on capital raise strategies for very large businesses. Most recently, I was an SBDC, Small Business Development Center advisor, and our office, which is in a more rural area, raised over $30 million in just 1 year. And that's covering 6 counties and a very rural area, no major metropolitan areas. Did a lot of SBA loans, but other types of funding as well. I'm one of the co-founders of ICS and BCLI, and I'm a full-time professor. I teach these topics to credit earning students, typically full-time students. Teach financial literacy, small business management, which addresses access to capital, and principles of management. In terms of education, as I mentioned, I have an MBA in finance, a master's of health administration and strategic planning. I was very interested in the intersection of healthcare and finance, and undergraduate degree in accounting. Our learning objectives for our time together today is really simple. 3 things. Number 1, we're going to learn about some of the secrets of building business credit. Now, business credit may not be something that you've considered as part of your capital raise strategy, but after we spend a few minutes together today, I think you'll agree it should be part of it. It may not be your capital raise strategy in its entirety, but it would make sense for it to be part of the strategy. Then we're going to talk about some common mistakes that we often see small businesses making that can be a barrier from accessing capital. I think some of these will surprise you. And then we're going to wrap it up by talking about the grant subsidized program that's available to help small businesses like yours access capital. So let's go ahead and get started with learning objective number 1, which is business credit. We want you to learn how to immediately get business credit that's linked to your EIN not your social security number, and it works regardless if you're a startup or existing business, and it has no bearing on your personal credit. You could have great personal credit and you want to protect it, or not so great personal credit, so that's a barrier. But we're going to talk about business credit off the EIN. Well, why does this matter? The bottom line is most small businesses fail when they try to get money to start or grow. And we can look at the publicly available data, for instance, the denial rate on SBA loans, which is the majority of applicants. But what that ignores is that many small businesses never even make it that far to apply to get denied. So most small businesses fail when they're trying to get money. And what we need to understand is that there's a formula for approval. We commonly work with small businesses that are frustrated and disappointed and sometimes almost skeptical. Oh, there's no way for a startup, for example, to get capital, and that's just not true. So what we need to do is we need to meet the underwriting criteria for the specific type of capital. And if you take nothing else away from this webinar today, understand that there are many different types of capital, and the key is to find the right type for your mitigating circumstance. Because if you find the right type of capital for your circumstance and you meet the underwriting criteria, then it's an automatic approval. I mean, they're wiring money into your account often the next day once the underwriting is complete. But what happens is we often don't know what the right type of capital is, or we don't meet the underwriting criteria, and so we face a decline. Most people don't understand that understand how business credit building process works. Now, there's three key differences of business credit. Number one, business credit always works. And it's, I guess, a good analogy of if you have a child or know someone that has a child, or just think back to when you turned 18. Normally, when you turn 18, you don't have any bad credit, you don't have any good credit, you're just kind of starting as a clean slate. Well, the bottom line is that's where most small businesses are. They've not done anything to build good business credit. They've not done anything to have negative business credit, although we'll talk about some unique aspects of how you start with a negative score in a moment. But if we're starting with that clean slate, we can build business credit fast and effective, and it's very predictable. And so again, if you think about working with an 18-year-old and helping them build personal credit, yeah, you could say, well, yeah, you should always be able to build personal credit as long as you open the right type of trade lines and pay your bills on time. Very similar with business credit in terms of it always works. Another difference, the second difference of business credit from personal credit is it's publicly visible. Like you can't pull my credit, I can't pull your credit legally without permission. But business credit profiles are out there. Dun & Bradstreet, Experian Business, Equifax Business, some of the larger credit repositories, they sell that information to anyone that's willing to pay for it. So what does that mean? Well, that means that your prospects may be looking at your business credit before they decide to work with you. Your clients may decide if they want to continue to work with you based upon your perceived credibility. And of course, your competitors could be selling against you based upon your public profile. If you're going after government contracts or Amazon, Walmart, it's not unusual at all for those larger entities who are a little more sophisticated to pull, for instance, your D&B report and make decisions to work with you or not based upon what's publicly available. So we can't just ignore business credit. Even if we don't need business credit to access capital, it still impacts our business because it impacts how others view the credibility and stability of our business. And then the third point, which I alluded to a moment ago, which is unfair, but it's the way that it works, is that you'll have a bad business credit score even if you do nothing. So for Dun & Bradstreet, for example, the scores, the PAYDEX scores go from 0 to 100, and you'll have a 0 until you have at least 4 trade lines reporting. For Experian Business, even with no trade lines reporting, they'll give you a failing score. You'll typically be around a 27, 28, 29 out of 100. It's called the Intella score. So business credit is a big deal. We can't ignore it, but it is an excellent way to access capital because it's fast and it always works. So what exactly is business credit? Well, it's business credit. It's credit that's obtained through the business name, not personal. So what we see is that the business is building its own credit profile and its own credit score off of its own entity, not off the owner. So again, this is in the business name and it's based upon the business's ability to pay. And that's huge, right? Because sometimes, especially when we're in the early phase of an entrepreneurial venture, we may not have a whole lot of documentable cash flow for our personal income, but we can certainly show the business's cash flow just simply by the business bank statements. So it helps in that regard. Fourth, business credit isn't just a separate source of capital. It's often part of the underwriting for business loans. So for example, if we're going after an SBA loan, which we help frequently with, they use a different type of credit scoring methodology. And that credit score methodology is called FICO SBSS. And so you have a FICO SBSS score. It's a combination of a few things, including your business credit worthiness. We need to have at least a 165, and I'll write this, to get an SBA loan. We need a 165 FICO. And most of you may not be familiar with what that means or the range from 0 to 300. We can certainly help you with that. But what's the point? The point is that business credit isn't just a standalone source of capital, and it impacts our access to loans in many cases. Then business credit is fast to build, which we mentioned. It can grow very, very quickly, and I'll show you a few examples of that. And literally, once we review your profile and make sure it's updated and accurate, we can usually get the first $5,000 to $10,000 of business credit in the first 24 to 48 hours. And so that is quicker than if you were an 18-year-old and wanted to go access personal credit. The likelihood without a cosigner that you'd be able to go get $5,000 to $10,000 of personal credit on day one is very unlikely. And then ultimately, strong business credit increases your borrowing ability, both in terms of getting approvals, which we just talked about up here, the amounts of approval, and then the terms. In other words, the interest rates and how affordable that cost of capital is. The limits of business credit are often 10 to 100 times higher than consumer credit, and that's directly from the SBA. So business credit is very important. I don't really understand why it's so infrequently taught in whether it be high school or undergraduate or graduate programs or out in the community, but certainly it's our pleasure to help you become more familiar with it and help you build your business credit. Let's look at an example here, and it's a little bit of a busy slide, but I'll guide you through it. So here we have a profile off of Experian Business, one of the larger credit repositories, and essentially everything is zero or nothing. It's just baseline information. They've not done anything wrong. They've not done anything good. It's just a starting point. With that, as I mentioned earlier, you almost always start with a low score, even though you've done nothing wrong. So in this case, and this is probably going to be about the same with your business, you have a 28 on a 0 to 100 scale. And that's pretty low, right? I mean, remember back from elementary school, if the teacher gave you a 28 on a test, that's not a very good score. But what's interesting is even with a very low score, you still have a credit limit recommendation of $1,000. Well, if I came to you with a 500 FICO score, personal credit, very poor, analogous to this 28, and asked for a loan, the answer would probably be zero. But in this case, we're still eligible for our credit limit recommendation of $1,000. And we're going to watch these two grow by building our business credit profile. So that's some baseline information, and this is where most small businesses will be. We're going to help pull your business credit profile, make sure it's accurate, see what's reporting, but in most cases, yours is going to look very similar to this. Now let's go ahead and add just one trade line. And we added one net 30 trade line. So that means that they extended us credit, but we only have 30 days to pay. By opening one trade line, making an on-time payment, that has increased our IntelliScore to 96. So we went from a 28 to a 96 by just demonstrating one time that we'll pay bills on time. Also, it over doubled our credit limit recommendation. Now our credit limit recommendation has gone from 1,000 to 2,500. We need to see that continue to build, right? So we can access more capital. So we talked about business credit building being fast, and this is a great example of it, just with one trade line. Now, this isn't probably where you'd want to start, but it illustrates very nicely by taking positive action, you can see results quickly, and it really helps us become better positioned for access of many different types of capital. Now, there are lots of examples, and they're kind of stacked up here, and because of the webinar software, it shows everything at once versus having transitions or animation. But the bottom line is successful businesses use business credit. Here, for example, we can see Walmart has 513, and behind this is Facebook and Amazon and a lot of other companies' examples, and they often have 100+ trade lines, even though they're very cash rich. So I think in many cases it makes sense for us to stop and say, well, what are successful businesses doing, and are there any of those practices that we might want to adopt as a small business? And building business credit certainly is one of those. So let's talk about some key vocabulary when it comes to business credit. We mentioned that Dun & Bradstreet, commonly referred to as D&B, is one of the most influential business credit repositories, and the score that you have with them is called a PAYDEX. And again, it ranges from 0 to 100. Experian Business we talked about a bit. Here, still ranging from 0 to 100, but it's called an IntelliScore. What we said is with PAYDEX, you typically won't have any score in the beginning until you have 4 trade lines reporting. So even if you have 1, 2, or 3, typically you'll still have a 0 score. Where Experian Business, I don't know if this is better or worse, you'll have a score by default, but it's almost always going to be around 28 or so to begin with, until we start creating some positive payment experience like we see here. DBT, do you know what DBT stands for? Because your business has a DBT score. It stands for days beyond term. So what you want is 0. So that means when a new issuer of credit is deciding should they issue you credit, whether it be a loan, line of credit, or what have you, they're going to look to see what your payment experience has been in the past. And if your DBT is in fact a 0, that means on average, they expect that you'll pay on time or 0 days beyond term. That's preferable. If you had a DBT of 5, that means on average you've been paying 5 days late. And so they're going to anticipate if they extend you credit, you're going to pay 5 days late, because that's what you've done in the past. Trade lines. These are issuances of credit that could be credit cards, lines of credit, loans, a company car, so forth. But it's an extension of credit that's reported on the bureaus. Now, it's very possible, actually probable, there's people that you pay now that just simply don't report on Dun & Bradstreet and Experian Business. Maybe your rent, for example, or other vendors. And so Dun & Bradstreet and Experian Business offer some fee-based services that you could use to try to get those trade lines reporting. But what we can do is just help you build some organic trade lines that always work. But the bottom line is we need trade lines reporting to illustrate that we pay our bills on time, and that's how we improve our business credit worthiness and increase our access to capital. Payment experiences are when we pay. Now, payment experiences on business credit is a lot different than personal credit. So for example, if we were talking to an 18-year-old and said, let's start building your personal credit, let's go get a secured credit card each month, buy a tank of gas and pay on time. And each month you'll have a new payment experience. And over time, that's going to build your personal credit. That's a true statement. It doesn't work quite the same way on business credit. Instead, on business credit, we typically only get credit or recognized or value from each trade line once. So if we opened a American Express business credit card, and even if we used it monthly and paid on it monthly, in the world of business credit, usually you're going to only get one payment experience from that. So what does that mean? That means we're going to need a lot more trade lines to create more payment experiences to qualify for bigger purchases. And then credit limit recommendations is how the system calculates based upon your business's business credit profile what they recommend that a reasonable extension of credit would be. So let's go back up here to the top. So we looked at this one earlier. We start with a base of 28. This is where we had no payment experiences showing, but we still had a credit limit recommendation of 1,000. Then we added one trade line, bumped our IntelliScore up because we showed the world that we'll pay our bills on time, and it more than doubled our credit limit recommendation. We looked at those before. But if we continue to build, it of course helps and pay our bills on time. It maintains our low risk status, improves our financial stability risk from 55 to 98. But most importantly, look at that credit limit recommendation now. Look how much it has increased. So this is what's going to allow us, for example, to go get a company car in the company name without a personal guarantee, or a fleet of company cars, for example. All right, so how do you build business credit? Hopefully we've established that it's a good thing, it's an important thing, we should do this. We can't afford to ignore it any longer. Well, how do you build it? It starts with the setup of your business. And so, of course, when you start a business, you make a decision of what type of entity. You could form a DBA, a sole proprietorship, a partnership. None of those work so well with business credit, though. We really need an LLC and a corporation, whether it be a C Corp or S Corp, and nonprofits work as well. We're going to need an EIN, and of course, we can help you with all these steps. So don't think that these are prerequisites that you have to have before you can use our grant subsidized program. That's not the case at all. But to build business credit, we need an entity, we need an EIN, so it's the unique identifier of your business, analogous to the social security number is for you. We're going to do best if we have a commercial business address. And if we work from our home, that's okay. And there's a few exceptions, but in general, we're going to have a better track record, more success in building business credit if we have a commercial address, because it's seen as more credible. And so you could lease a space, you could buy a building, or you could just use one of the many offerings for virtual or co-working space. Whatever that address is, though, we need to use it consistently. We frequently see, and I'll draw lines all sides of this, we see so often inconsistency. So the official address of our business needs to be on file with the IRS via our EIN, the state, which we formed up here with our LLC or corporation, with our bank, and on our website. We also need to have a business phone number that's not a cell phone number. It could be forwarded to your cell phone number, but we need to have a business phone number that's listed with directory assistance. And again, we can help you with all these, so don't worry if you don't have these in place. Then secondly, what we're going to do is make sure that your business credit profile is set up accurately and optimized. We've done this for a long time at a heavy volume pace. And I can say with confidence, maybe 1% of the business credit profiles that we look at don't need work. They almost always need work. Now, there's not a cost to improve them, and it's not real difficult, but we need to get the records accurate. Otherwise, things like your employee count, your revenue, your address, your phone number, your industry code are going to be missing or inaccurate or incomplete. And that could very much make you look higher risk than what you are and impact our capital raise. Now, what's really neat, maybe a little bit confusing, but really neat, there are two options for building business credit. And through our grant subsidized program, we help clients with both. So it doesn't matter to us. There's the fast track, and that works. And getting, we say up to 100,000, and we've seen from 50,000 to 125, 150 in around 30 days. So that is, blowing and going, see great success. And we commonly refer to that as UBF, unsecured business financing. It's a beautiful thing because there's no business plan necessary. Typically, there's no collateral necessary. It's a pretty straightforward process. Alternatively, we can do an organic build. This means we're taking a step-by-step approach to adding trade lines and payment experiences to your business credit profile. It always works. And so that's where we'll start with some net 30 accounts, like we showed you a screenshot of, and we'll get into store revolving, and then we'll get into unrestricted revolving. So this one, you have to kind of qualify for based upon your circumstances. This one always works. And so when you see some of our materials that say we guarantee $100,000 capital raise, some people say, well, that's too good to be true. That can't be accurate. Well, it is, because worst case scenario, we can always do an organic business credit build. So again, these are stacked up, and so this webinar software doesn't allow us to use transitions or animation, but the bottom line is business credit absolutely works. And you can go to our website, innovativecapitalstrategies.com, click on credibility and see a bunch of success stories. But certainly, example of 24,000 here. My scribble was off, sorry. 50,000 American Express. It absolutely works. All right, so that finishes up the conversation about what is business credit and why is it important, and hopefully while you'll allow us to help you in building it, let's pivot over to our Capital Ready program. Our Capital Ready program came out last year in 2018, really in response to the success of the business credit build. So the business credit build program started in 2016, and while it always works, it sometimes isn't all that is needed for the desired capital raise. It's one element of it. So let's talk about the full program. So the grant subsidized Capital Ready program was designed to assist pre-launch startup and existing small businesses access capital to start, grow, and reach their potential. We do not compete with banks or credit unions. We are not a lender. The world does not need another lender. There are many, many lenders out there that would love to loan your business money. But you know what? You have to find the right type, right source of capital, and you have to meet the underwriting criteria. Then they'll loan you the money. I was speaking to a veteran. We have a whole program focused on veterans. That's probably our fastest growing segment. And he felt really beaten down. Obviously served his country and an admirable man. But the bottom line is, if you don't meet the underwriting criteria, you're going to be declined. So we either need to make changes to meet the underwriting criteria, or we need to find a different source of capital that we can meet. Now, back to the non-compete with banks and credit unions. They can refer their declines to us because most Small businesses, if you're thinking about where do I get money, you go to the bank. But the bank is usually looking for the 3 C's, right? Cash flow, creditworthiness, and collateral. And typically they want all 3 of the 3 C's. A lot of small businesses don't have those 3 C's. What we can do is if you have any one of those 3 C's, we can access capital. But just wanted to clarify, we don't compete with banks, credit unions, or other organizations. And as you've heard me repeat several times, and if, again, you take only one thing away from today's webinar, we have to first identify the right type of capital. We have a client in Georgia who just received $150,000. And that was after he and his business had several failed attempts at accessing capital before coming to our Capital Ready program. The key is you've got to find the right type of capital for your mitigating circumstances. And if you meet the underwriting criteria, then we get approved. That's specifically what the Capital Ready program does. All right, so what are the components of the Capital Ready program? And it can be labeled as a TA program, standing for Technical Assistance. What we're going to do is assign a finance officer once you enroll that's going to look at immediate sources of capital. Our goal is to get the first round of capital, maybe interim funding, in your hands in just the first 30 days. Can't guarantee that will happen because you've been making all the decisions in your life and with your business. And so and in the beginning, we're working with whatever you come to the table with. But in most cases, we can get some interim funding in the first 30 days. And that's certainly our goal. We're going to help put together, through our TA, or technical assistance, the loan package, right? So we're going to put together a business plan. Now, what you may not realize is that not all sources of capital require a business plan, number one. And number two is that the business plan needs to be written for the desired audience. We're doing a lot more now than I thought we would on equity-based capital raises, helping small businesses get investor equity, money that doesn't have to be paid back. Well, that audience needs a different type of business plan than does an SBA loan. And even with SBA loans, there are different types of SBA loans. There's 504 and 7A and 7A Express and even micro loans. We're typically able to get an SBA loan, as a tangent here, in 15 days. A 7A Express SBA loan in as little as 15 days. But part of that is having a business plan that meets the requirements of the lender. We're going to work on a personalized financial statement, PFS for short. And it's almost well, it is surprising that I'd say 90% of the personal financial statements as a baseline that small businesses have, if they have one at all, is not very good. And it's often not accurate, not completed properly, and often not optimized. And that can really impact. And I can tell you, some lenders, that's the first thing they look at before they look at credit, business, personal, or anything else. They look at your personal financial statement. So we're going to work on that. That's step 3 of our 10-step process. We're going to help you optimize your personal and business credit scores. We are not a credit repair company on the personal side, but we certainly are experts in personal credit, so can provide some guidance and things that need to be done. One of the most common issues we see with small businesses is they will have used personal credit to an extreme. So their personal credit cards are all charged up. The revolving utilization is crazy high. And then that punishes them because they're so leveraged that their personal credit scores plummet by 30, 50, 70, as much as 100% by being fully leveraged. What we can do in many cases is go get a small business loan, pay off the personal balances, and then all of a sudden the score pops up and we have more options. But that's an aside. We'll help create interim financial statements if needed, as well as financial projections, revenue and expense out 36 months, help you develop your uses of funds. And it's not unusual right here to see even when small businesses meet the other underwriting criteria, the way that they ask for the money gets them rejected. And as I mentioned a couple times, we guarantee a capital raise at least of $100,000. Again, there's different sources of capital for different circumstances. We have a new loan program that's just rolling out today, and the minimum credit score is a 550 FICO, so personal credit score. Startups are eligible. Don't have to have much collateral at all. We can almost always piece together. We'll do a little check mark. And so in many cases, your credit nor your collateral will be a barrier. Now, of course, they want to see and have confirmation that we can afford to pay the loan back. That's too good to be true to think otherwise. But there's just such a spectrum of available capital that's why we're so confident that we can always help a client raise $100,000. All right. So talking about some of the examples of funding solutions, the 7A Express loans, which I was referencing earlier, which is great. Again, that veteran that I mentioned I was talking to last week, he was confident that the system has locked out startups from getting capital, and it's just not the case. We can get an SBA loan for a startup up to $150,000, funds in around 15 days, and as I mentioned earlier, we only need a 165 FICO, so not a big barrier. Then there are larger loans where we're looking at real estate, equipment, so forth, and that can go up into the millions. Seed capital, I was making reference to that. In many cases, very fast funding. This may just be interim funding, right? This may not be all the capital you need, but we might have to look at tranches, step by step, layer by layer of capital. We helped one restaurant get $1.2 million to start a restaurant. Now, there wasn't much they could do in terms of phases, right? Because they had to build out the space and buy the franchise, buy the equipment, and train, hire all the staff. So I do realize that there's some business models that it's kind of all or nothing. But for especially service-based businesses, many of them, we can ramp up and get to the capital that's needed. I referenced earlier unsecured business financing, $100,000 or more in the first 30 days. In many cases, the interest rate is zero or near zero for interim period. And the beautiful thing is it reports on business credit. No collateral needed for UBF, and it works great for startups and existing. And there's I'd fill many of these screens if I had to outline all the different sources of capital. But certainly if you have a 401k or an IRA that from your prior employment, that money can be used without breaking it, without paying penalties. We're doing more and more with private equity that could be smaller deals as low as $20,000 or much larger, including crowdfunding. So there are all different sources of capital. Our job is to help you understand our 10-step process for raising capital. And on our website, innovativecapitalstrategies.com or .org, you'll find under the Capital Ready package a different YouTube video that really breaks down in details the 10 steps. The way I would explain it is, imagine you order a pizza, and let's say it's cut traditionally in little triangles, right? So that pizza is cut into 10 slices. Business credit, which we talked earlier today, is one of those slices, and it's a good slice, and you can just eat that one slice and be done with it. But if you're looking for the broadest preparation for a capital raise, then you need all 10 slices. All right, so let's briefly review what we learned today, and then we will wrap it up. So if we were live together, I'd ask you these questions and wait for you to respond. Since we're not live together, I'll give you the questions and some help with the answers. So what makes business credit different than personal credit? What did you learn about business credit being different than personal credit? Well, we learned that business credit always works. that we typically start with a failing score, that business credit's visible to the outside world, so that could make it important even if we're not planning to use it for a capital raise. We also learned that it's used in the underwriting criteria of most business loans, especially SBA loans, including the FICO SBSS credit scoring algorithm. So hopefully we learned a lot about business credit, and the bottom line is we should hopefully be working together to help you build that. Then we talked about, why do most small business owners fail when trying to access capital? Remember, we were going to talk about some of the pitfalls. We talked about that they need to identify the right source of capital for their circumstance, and then secondly, meet the underwriting criteria. We talked about the setup of their business is important in terms of the entity type and having their phone number listed with directory assistance. We talked about quite a bit when it comes to proper preparation. Not the least of which, of course, is the right business plan for the right source of capital and optimized personal financial statement and so forth. We went through quite a bit of new vocabulary. We talked about DBT, days beyond term. We want to have a 0 for that. We'll help you understand what your DBT is. We need to know what PAYDEX is, and that's our business credit score through Dun & Bradstreet. We talked about IntelliScore, which is our business credit score through Experian Business. We talked about trade lines and payment experiences. All right, now I didn't give you a whole lot of detail on this one, but it emphasizes the fact that we have to find the right type of capital for your mitigating circumstances. And so if we're just looking for working capital so you can pay yourself, for example, or restructure some of your existing debt, then it'd be like a working capital loan, 7A or even a 7A Express. Then SBA 504 is used for equipment and real estate, more tangible assets. But the neat thing is we can do both of these. We work with a number of lenders really closely, and it's not uncommon that we'll access both of these to be able to cover the entire spectrum of need for the small business. We didn't exactly hit this directly, but what is the minimum personal credit score to qualify for a business loan? Well, technically, there is no minimum personal credit score, but with the sources of capital that we typically are using, the answer, and I think I made reference to this earlier, is a 550. And if you don't have at least a 550 score, we can still sit down, look at it, and create a plan to get there, or bring a credit pledge in. We have a client just this morning we were working on. His personal credit's a little banged up, and so we brought in a credit pledge, which is going to allow us to go to funding this week. All right, second to last. Does your business need to be profitable to qualify for a business loan? And we didn't really directly address this. I'll answer it in two ways. Again, there's different sources of capital for different circumstances, and so some sources of capital would require that. But the answer to this question is no. Even with the SBA, we can get an SBA loan even though that we're not showing profitability. By year 3, we need to show profitability, but we can have 2 years of losses and still qualify. And then we talked about different elements of properly setting up your business to improve access to capital. And certainly part of that is hopefully working with us and getting your business credit profile optimized, because that impacts that individual source of capital, but also has a spillover effect to many others. All right. Well, we have an evaluation form, but since we're not sitting together, you won't have to fill that out. But what we'd love for you to do is to, after you finish this webinar, to go over to our website, innovativecapitalstrategies.com, click on the Capital Ready package, and there's an inquiry box. And it doesn't cost you anything, of course, and doesn't commit you to anything, but you'll give us just a little bit of information about your business, and then we can follow up, and we can even put together what's called a CAP and I'll write that on here. A CAP, which is grant funded, is a capital acquisition plan. So it's a roadmap of how to get from where you are to where you need to be. So it gives us an understanding, might we be using multiple tranches of capital? Will all be done in one fell swoop, but it gives you a roadmap to follow. So with that being said, thank you so much for the 45 minutes we spent together. We look forward to assisting you in raising capital. We have a great affiliate program that you'll see on our career page. And if there's other small businesses that you know that could benefit from this webinar or a live presentation, you could actually be out teaching this at local churches and chambers, and through some revenue streams, you can actually be paid to do so. Thank you so much, and look forward to hearing from you soon. Have a good day.